It's a situation where negative outlooks are emerging. As a result, the awareness of how to solve this issue of fund depletion is also coming up. In fact, in the United States, it was evaluated that the gift and inheritance tax had been abolished, and there is talk of extending this as well. It was announced at a recent dinner with Republican lawmakers, which seems to carry significant symbolic meaning. President Donald Trump recently outlined potential tax reduction measures. This is recent news. It was on February 6th at a meeting with Republican lawmakers. He presented priorities for tax reform. At this meeting, he proposed tax reform measures in 6 major categories. It could have a significant impact. This could potentially bring substantial tax savings to those watching right now. It would be good to pay close attention to this. It might be the largest tax adjustment or reduction in the past decade. Let's take a look at the details. Before we begin, this channel provides professional information on U.S. law, U.S. tax law, and financial planning in an easy-to-understand manner. Not only this video, but we will continue to upload more beneficial content in the future. We hope you don't miss out. To ensure that, if you haven't already, please make sure to subscribe and like. On average, likes are about 10 to 15%. Please help us. To provide some background information, during the first term of the Trump administration, there was a very large-scale tax cut. It was called the Tax Cuts and Jobs Act, which was passed in 2017. This reduced tax rates for almost all income brackets. It also lowered corporate tax rates. Additionally, it provided very favorable benefits for the self-employed and small business owners. Since it was a very radical change at the current time, it was implemented as a temporary measure. If this had been made permanent, the political tension would have been too intense. So, as a compromise, it was revised in 2017 with what is called a 25-year sunset rule. This means that while it is current law, it is set to expire this year if no further action is taken. However, President Trump, in his recent meeting with Republican lawmakers, proposed some ideas for revising this. This suggests a move to adjust the tax law once again before it expires. According to reports from the Wall Street Journal and other related media, 6 points are mentioned. The first one is a tax-free policy on tips, social security benefits, and overtime wages. This was mentioned several times during the presidential election, drawing a lot of attention, especially the abolition of taxes on tips as the first point. This directly affects people who earn a significant portion of their income based on tips. For workers, so the ripple effect would be quite large. Regarding tips, under the current law, they are treated as earned income and taxed accordingly. Last time it was in Nevada, especially in Las Vegas, where many people work in the service industry. There was a significant reaction when it was announced during a campaign that taxes on tips would be abolished. So, there are several measures such as completely excluding them from taxable income or allowing deductions equivalent to the income from tips, ultimately aiming to make tips non-taxable. There have been similar attempts in the past as well. In 2014, Ted Cruz, a senator from Texas, also proposed a bill. It allowed for deductions on wages received as tips up to about $5,000. In fact, it was a method that provided a tax deduction, but anyway, this proposal at the time was not passed, due to concerns about fairness with workers who do not receive tips. Additionally, the issue is not only about fairness, but it could also lead to some inconsistencies in the way income is recognized in the future. For example, there is a concern that self-employed individuals might attempt tax evasion by converting what should be their basic income, namely business income, into tip income. Therefore, due to these issues, it was not easy, but there was mention of a direction for improvement. So, there are various opinions on how this will turn out, but among the opinions that say this is not really necessary, it is generally noted that those who live off our tip income are low-wage workers. About 37% of them already have very low income. Since they do not pay federal income tax, there is an analysis suggesting that making tips non-taxable would not directly benefit them. That was the opinion regarding the non-taxation of tip income. Next, the second point, which will also have a significant social impact, is Social Security. It concerns the non-taxation of income. This refers to the Social Security benefits received by those aged 62 and over. There are already groups that do not pay income tax, but in principle, this is considered income and is taxed. Currently, up to 85% of it can be subject to taxation. So, this too was mentioned during the campaign by then-candidate Trump, who said he was considering a plan to not impose any federal income tax on Social Security benefits. He also mentioned in a meeting with Republican lawmakers that this is still under consideration. If this happens, it would be like giving up an annual revenue of $53.3 billion, and at the same time, it's always a problem, isn't it? It would also be connected to the issue of the depletion of the Social Security Fund. In the case of the United States, They say the reserves will be exhausted around 2035. In the current situation like this, and after that, there is a negative outlook suggesting that only about 85% of the promised pension amount can be paid. As a result, the awareness of how to solve this fund depletion issue also arises. Therefore, if we consider the relatively wealthy, elderly receiving pensions tax-free, it could lead to increased private consumption and positively impact the economy. However, it could also result in a burden on the younger generation as the next generation. So, how will these issues be resolved? This is the kind of awareness that will remain regarding the third aspect, which is about wages. This will also be quite sensational concerning overtime work. The proposal is to make wages for this tax-free. Overtime typically refers to work beyond 8 hours for which 1.5 times the regular wage is paid. In California, for instance, if it exceeds 12 hours, it becomes double time. This means they pay double the wage. Currently, income tax is applied to overtime, just like regular income, but the proposal is to make it tax-free. This could increase the motivation for workers to choose additional work. Through this, President Trump emphasized that he wants to benefit those who work the hardest. He expressed the intention to increase their disposable income by reducing taxes. Similarly, as with the 2 points mentioned earlier, it is estimated that implementing this could reduce tax revenue by about $1.7 trillion over a span of approximately 10 years. Unless the government significantly reduces its spending by the same amount, there will be a substantial tax revenue shortfall, and how to compensate for this will be a critical issue. According to some observations, this was the first agenda item related to income tax. The second point is the opinion that the tax law revised in 2017 will be updated. Let's take a quick look at what this was. So, back in 2017, originally the highest federal personal income tax rate was 39.6%. This was reduced to 37%. This means it will continue. Next, there are pass-through entities like self-employed individuals, LLCs, and S corporations. For these, they could receive an additional deduction of 20% on their taxable income, known as the Qualified Business Income Deduction, which was also set to end. But they mentioned that this will also be extended, and perhaps you are already aware, but there is something called the lifetime exemption in gift and estate taxes. Originally, this amount was around $5 to $6 million, but it has increased to $11 million per individual. Currently, the lifetime exemption amounts to nearly $14 million. Ultimately, this means that if the accumulated gifts and the estate value at the time of a person's death do not exceed $14 million, then practically there is no gift or estate tax burden. In reality, there aren't many people who typically have assets exceeding $14 million. As a result, there has been an assessment that gift and estate taxes have effectively disappeared in the US, and this is about extending that. And there's something called bonus depreciation. This refers to when we purchase fixed assets or tangible assets, we depreciate them over a certain period, known as the useful life. It's a method of expensing over a period, but bonus depreciation allows you to recognize it as quickly as possible. This was also a system that provided significant help to businesses, and they have announced their intention to extend it after it expired. So, in a way, these are existing temporary laws that are set to expire in 2025, but since they are simply being extended, it might not be too difficult to get cooperation from Congress, especially since the Republicans control both the House and the Senate. Now, the third noteworthy point is the state and local tax. It refers to the method of increasing the deduction limit for state and local taxes. This is it. When we file our personal income tax, we deduct the taxes paid to state and local governments as an itemized deduction when calculating federal income, and this was reduced to $10,000 at the time. This happened when the law changed in 2018. In other words, no matter how much income tax I paid to the state government, I could only use up to $10,000 of that payment to reduce my federal income, and this was considered unfair, as it focused too much on equity. Because for those who earn a lot and pay a lot in taxes, the state and local taxes that can be used to reduce federal income tax should exceed $10,000. Especially high-income earners living in high-tax areas like California, New York, and New Jersey pay a lot in state taxes. President Trump expressed the opinion that these should be taken into account. The fourth point he mentioned is this. This might not be a topic of interest to many people, but since it was mentioned, here it is. There are team owners who are billionaires and own sports teams. There were originally tax benefits for them. An announcement was made to remove these benefits. What this means is that billionaires have been buying a lot of sports teams. The reason is that there was a huge tax deduction structure behind it. For example, there is the bonus depreciation I mentioned earlier, but typically, when you purchase an asset, you deduct it as depreciation expense over its useful life. So, in the end, this means it is recognized as an expense when purchasing a sports team. At that time, there was also a regulation, or law, that allowed the purchase price to be deducted. In fact, if you think about it, sports teams, like any other business, don't experience depreciation like when you buy machinery or buildings. So there's really no reason for depreciation to apply here, but the current law recognized it as depreciation. It was announced that they plan to eliminate this because it is considered unfair. The fifth point is, they also announced plans to eliminate any loopholes related to carried interest. This too is not very common, but it seems like something you might understand. What it refers to is carried interest, which might sound a bit complicated. It pertains to the income earned by private equity, venture capital, and hedge fund managers. In reality, since this is income earned as compensation for their work, it should be subject to the regular income tax rate. However, it is treated as investment income, which is typically subject to a lower long-term capital gains tax rate of 20%. The regular income tax rate can go up to 37%, so there was a provision that allowed private equity, venture capital, and hedge fund managers to have a portion or a significant part of their income taxed more favorably as long-term capital gains. They are now talking about eliminating this provision. And finally, the sixth point. It will likely be a continuation of what Mark was saying. It was announced again, emphasizing the opinion of reducing taxes on products manufactured in the United States. Although no specific structural details have been released yet, it would be a mention of expanding tax benefits for products manufactured in the United States, or companies providing services there. It was announced at a recent dinner with Republican lawmakers, which might carry significant symbolic meaning. These proposals, of course, they are not official proposals yet. They are likely drafts. To actually become law, they must go through several stages. First, it will be introduced in the House. Then, these details need to be reviewed and debated, and must be approved by a full vote in the House. After that, it will move to the Senate, where it must also be approved by a vote for the bill to proceed. Based on that, the President, once signed, it will be finalized as law. So, at this point, as I briefly mentioned earlier, the Republican Party holds the majority in both the House and the Senate. In that regard, it might be a bit easier, but even so, it will be finalized in a way that reflects public opinion as it goes through the legislative discussion process. So today, we covered the content related to the tax reform, recently announced by President Trump as it was featured in the news. I believe it's an important piece of news because it will have a significant impact. I hope it was helpful. Lastly, this kind of information, I think there are many people around you who might need it. This channel is one that grows together with you. I kindly ask you once again to subscribe and like. I hope you will gain essential information next time as well. And also, please help ensure that this useful information is well conveyed to those around you. Thank you.